Hi there, this is Brendan Stoneman with Remax Kelowna, and I'm joined by financial advisor Tom Gaymer. So I know when people are looking at doing their life insurance, you've got a couple different options between coverages.
Sure.
Maybe walk us through the two different types, what they're called and some of the pros and cons to each.
Sure. There's two main types or two main categories when we look at insurance. So you're going to look at term insurance and you're going to look at whole life insurance.
Okay.
Okay.
So let's break down term insurance then. What are the,
Sure.
I guess, the benefits or potential limitations to term insurance?
Sure. Term insurance is designed to be there for a specific amount of time. So typically you're going to buy it in blocks. Okay. So you might buy it for 5 years, 10 years or 20 years. You can get some products out there as well which are actually going to match a particular time frame. Okay. So you can pick the term that you want it for. Right. But it is designed to be there for a set term of insurance, at which point a couple of things are going to happen. It's either going to expire or you're going to choose to then take that on and renew it at a higher cost, right, or you're going to cancel it and rewrite a new one.
Okay. So cost-wise, how does term insurance measure up in relation to the death benefit if something happens in that period?
Cheap as chips.
Okay.
That is the cheapest insurance that you're going to get. Reason being, there are risks on both ends. Okay. The insurance company are betting that you're not going to die early. Right. It's not that you are betting you are going to die early, but you're betting that the cost of you covering it is inconsequential, it doesn't matter.
Right.
So that's why it's so cheap.
Okay. So then let's flip over to the whole life insurance and how that's different than the term insurance.
Sure. So I'll go back to being presenter again and I'll ask you a question. Mm-hmm. What are the two certainties in life?
Death and taxes.
Okay, so with a whole life insurance policy, the company knows that they are going to pay out.
Right.
There's there is ultimate risk to them because they know they are going to pay out. They're also going to give you tax-free growth inside of that policy as well. It's going to be more expensive.
Right. So then, there's obviously some differences between the two. What's better? Like, how do you decide what to do?
Sure. Any sort of decision like that shouldn't be taken lightly, and you should talk to a professional. Speak to them, speak to myself, speak to somebody else in my profession. Ask them for advice. Mm-hmm. See what they say. Typically, you're going to get suggested to have a blend of both. Okay. A term insurance to cover the bulk of your immediate need, and then a whole life policy which is going to see your duration, and that's going to cover some of the costs which are always going to be there. You are going to die at some point, and there are going to be costs. Right. What if you died after the term insurance had expired? Right. Those costs are now going to go to your loved ones.